What's going on, guys? Bexio, and today we had a brand new video talking about the stock market because there is so much fear. Everything that could go wrong is going wrong. China fear, new COVID variant fear, all being thrown at the market, and the amount of red we're seeing is really reflecting that. A lot of things down, very big on the day, and it basically means everything is on sale. It is Black Friday, but this is a big time to really consider why you are in investments. You look long term. That's why you look over short term moves like this into what's the long term look like. And then days like this are buying opportunities. They are things that are on sale that can actually be good in the long term future. Where, today nothing is really good. And why is that? A lot of people might ask. This is from the China FUD and fear going on right now. The Didi share, the Didi company, with their shares sink and report that Chinese regulators have asked it to delist from the U.S. stock exchange, the New York Stock Exchange. This is what they're on. You can see Chinese regulators have asked Didi to come up with a plan to delist from the New York Stock Exchange in the U.S., according to a Bloomberg article. So China coming after this stuff. Didi is basically a company like Uber. It's basically the Uber of China. So, people in the U.S., investors in the U.S. saw Uber, what it's doing, and then think, China's population is massive. Didi could be the same thing as Uber. A lot of people were in that boat. You can see this just kind of talks about everything. The cyberspace admin of China asked Didi to work out details for delisting, subject to the government approval, the Chinese government approval. And then a privatization would be at the fifth of the $14 per share IPO price when the company was listed. While a Hong Kong float would likely be at a discount to what Didi's shares were trading at in the U.S., according to Bloomberg. So basically, those are the options for Didi right now: is delist and go private from the stock market in the U.S. Pay everybody that has shares there the $14 IPO price, and that's why we might not be seeing massive drawdowns on Didi, where you would think people should be selling out. It's going to get delisted, get out of there. But right now, the stock's like $8 or something. So if they're going to pay you 14, that's going to be a pretty big return for those shares right there. You can even see it right here. This is the Didi stock chart. You see the IPO right here. And like lots of IPOs do, pretty big collapse, kind of bouncing here. And then this news caused this gap right here where it went from literally just over $8 all the way down to $7.50 today, but kind of bounced back up. And my idea for that is there's so much going on with the privatization rumors, where if you can buy the stock for $8 and then sell it back to Didi, the company, for $14, I mean, why wouldn't you do that? So that's rumors, though. So a lot of people are going to be speculating on that. But for now, we do see, I mean, it was in a massive downtrend before this news, but then this news comes out and completely gaps everything. And like we can see right here, a state-directed delisting would be an unprecedented move, but highlights Beijing's continued push to rein in technology giants and put them under tighter regulation. So this not only goes for Didi as a Chinese company. You got to look at, Didi, I think Pinduoduo, it's like Etsy or eBay type thing. Then Alibaba, like the Amazon of China. So all these big giant companies that are in the U.S. stock exchange are at risk right now if the Chinese government goes through with delisting Didi. I mean, why can't they do it for Alibaba and all other Chinese companies? This is just going to bring a lot of, fears about Chinese companies in the market, and then obviously just the fears carry over to the rest of the market. But we can look at Alibaba too, the stock not doing really great. I used to be in Alibaba a long time ago, around when it was in the 200. I bought in and then sold it once Chinese government started going really crazy. The CEO went missing, and it was just a weird time. So I just was abandoning it and saying, you know what, I don't want to deal with Chinese companies anymore. And this is exactly why. You can see the massive just downtrend it's been on. It hit $319, and it's all the way down to $133 right now. And you can just see it's just been massively down, continues to get battered down. And this isn't going to help it, obviously, being scared of what the Chinese government might do to Alibaba. If delisting Didi goes through and they delist Alibaba, that would be massively bad news for being an investor in this company. And it's such a weird situation that nobody wants to be a part of. You can see all the fear and everything going on in the market right now. I mean, how many stocks are on here, and only 3 of these are green? Massive red, down 2%, 3%, 9%. That was the Bitcoin mining thing. MicroStrategy down massive. Carnival down almost 11%. Travel stuff has been hit hard from the next thing we're about to talk about, which is a new COVID variant that's in South Africa. And you see the Dow tumbled 900 points for the worst day of the year off of fears from the new variant, and the S&P drops 2%. So see the stocks plummeted from this variant thing. The Dow Jones Industrial Average is down 2.5%. S&P is down 2.27%. The Nasdaq is down 2.23%. So this is massive moves for the stock market. 2%, 2.5% doesn't sound big, but there's so much money in there that is a lot of money being evaporated, or value being evaporated. And it's just, the indices don't move like that. They don't usually go up or down 2% or more in a day. So it's very insane moves. So you can see all the fear going through everything. And this is when you would really keep hearing the Warren Buffett quote of be greedy when people are fearful, and fearful when people are greedy. No one really lives up to the second part of that, of being fearful when others are greedy. Everybody just keeps being greedy. But when things go wrong, as long as you are in assets that you believe in long term, that have strong fundamentals, the short term moves are going to happen, and they're going to be moves down in things, and you can use it as a buying opportunity to get in at better prices. But even if we look at the worst days of the year, obviously today, 2.5%. A lot of basically 2% moves for these other days, and 2.5%. So 0.5% doesn't sound like a lot, but it is a lot when you're talking about the Dow Jones and how much money is in there. And you see, just talking about the new variant contains more mutations. The component of the virus binding to cells, highly contagious Delta variant. So no scientists don't know, but what we do have to expect is it's a virus. There's going to be lots of variants that come out on this. There's going to continue to be variants that come out on this. So it's not something that we have to react to every single time. We saw it with the Delta variant. The market reacted. It was bad. And then it just rallied again, and everything was good. It looked fine. Then we see this variant. Everything's bad. The fear, the market falls, and then it'll come back and rally once things find out that they're fine, or if things go back to how they were before and the fears were overblown. So we'll see how it actually plays out, but it is something to keep in mind. Like, we're going to get these variants and continue to get these variants. And then just to take a look at how this is affecting all of these different industries and things, we have travel related stocks hit the hardest. Carnival and Royal Caribbean down 11% and 13%. United Airlines down more than 9%. American Airlines down almost 9%. Boeing's down 5%. Marriott fell nearly 6.5%. So the travel industry, that types of things, massively impacted, falling very bad one-day moves for these stocks. Bank shares retreated on fears of slowdown in economic activity and retreats in rates. So Bank of America dropped almost 4%, and Citigroup dropped 2.7%. You have industrials linked to the global economy declined. Caterpillar off 4%. Chevron dropped 2.3%. And the only thing on the flip side, investors huddled into the vaccine makers. Moderna and Pfizer surged. Moderna 20%. That's crazy. And Pfizer 6.1%. So you can see all the money moving around, everything kind of selling out of fear and trying to go into safety things. We saw treasury bond yields actually go up or go down, which means a lot of people are buying in. So it's like 1.49%, which, I mean, that it seems like a waste of time to get that type of return. It just doesn't make much sense. But that's moving from risk on to risk off, and we're seeing those big moves with the massive amounts of fear that are going through the market. But we've seen this time and time again, and it's always proven out to be that you buy the fear, and then things start to recover, start to get back to where they were before, and it turns out that there was an overreaction. So we've seen that in the market time and time again. And looking at the year-to-date performance here, we can see all 3 of these indexes. So even though these massive declines down, I mean, you zoom out, look over the year, and you see it's still, the Dow Jones still up almost 15%. NASDAQ up about 20%. S&P is up somewhere in that 22% for the year. So that's still really good years for the stock market, which has been historically about 7 to 10% return. So everything is over the historical averages. So everything is still doing good in the long term when you zoom out. And that's why it's so important to look at long-term changes, as well as you can see when things get more fearful, these dips down. It's like the gold line. This is the NASDAQ. You see a little bit more fear, dip down. This is a massive dip. And then but if you bought it, everything went up great. The blue line, there's some dips here. That's some fear. If you bought those dips, you're still up. The S&P, still some dips. If you bought them and bought the fear, you're still up on your investment. So it's just something to keep in mind, and know that when there's so much fear, a lot of the time the market overreacts to news, and that goes for positive news too. The market will overreact and it'll go up way more than it should. And you just have to know that that's just what the market does. So just market being flooded with fear. I mean, no good news is coming out. It's all variant fear, China fear, all of this stuff going on. So, a lot of selling, a lot of people wanting to get out of risk, going to safety and stuff. And we've seen it happen time and time again. But we'll see how this trades out again. If you look at the long term, it might be a good buying opportunity. It might be something we'll look back on and say, the market overreacted yet again. But as always, don't forget to like this video and subscribe. We're on the road to 1,000 subscribers. Here's my next video.